feel bad for people who who's believing what this agent's giving out false information. I just felt the purpose of educating these kind of people and helping them.
Like a lot of young people won't think that far away, but that's the type of mentality that we gotta have, so that when we are 40, 50, you're like, you know what? Thank you to that wise 20-year-old Sonny that helped me set this up, baby.
The amount of money the U.S. government has printed for quantitative easing,
since last year,
for COVID.
Oh, really?
Is essentially putting stacking $100 bills. $100 bills.
Wow.
And it would literally reach the moon.
That's crazy, man.
That is crazy.
You're listening to Conscious Conversations, a personal and spiritual growth podcast to help you become your fullest expression. Enjoy. Hey, what is up, people? It's your boy Marco Chak. I am actually right now in Bangkok, BKK, quarantining in the hotel room, and just have some time to record and edit some videos. So yeah, I just want to let you know that the first 5 minutes of this episode got cut off due to some technical difficulties, but don't worry, a lot of juice still remains in the 1 hour and 20 something minutes of this episode, and just had a really good conversation with Sonny on how to actually start investing, how to think about portfolio allocation and all that technical stuff. So in the first part, we talk more about how to invest in yourself and why that is important. But this second part of the conversation actually goes into detail on how to actually set things up, like your account. We talked a lot about Bitcoin, different asset allocations, etc. And so, yeah, I hope you enjoyed this conversation as much as I did recording it. And just want to let you know, if you're looking for that extra support in your personal and spiritual growth, just remember, your boy Marco is always here for you. If you're interested, you can sign up for a free coaching call with me, where I'm just there to create a safe, non-judgmental space for you where you can be yourself and just talk to me about your goals, about your challenges in your life. And I'm just there to hold space for you and ask insightful, deep questions and elicit those answers and that higher self guidance from within, and help you become the best version that you can be. So yeah, just want to let you know that Alpha is always there, and I'm always there for you if you need me. And with that being said, let me bring you to the episode, and please sit back, relax, and enjoy.
I remember my first time experience with putting money outside and making it work for me was this Instagram advertisement on Forex trading. And I just got bought into this this Forex tip trading, which is essentially where they give you a tip and okay, you should trade on this currency now, and then you should sell it at this price, because those kind of people who are sending those tips, they did some analysis, and I'm just one of those people in the group that's going to follow their actions. But turns out it didn't work quite well. Lost some money, and definitely learned some lessons from that.
How old were you? When did you start doing that?
I think I was around 17.
Okay.
Yeah.
So in high school.
Yeah, in high school.
Okay.
Yeah. I think I lost 1,000 or 2,000.
Mop?
Yeah, mop.
Okay, that was about 200 something US dollars.
Yeah.
Okay.
It's not a small amount.
Okay. And when was the first time you actually made some money and started investing?
I haven't actually made some money until I've invested in the stock market. So
yeah,
which is just a year ago.
A year ago. Okay.
Yeah, I just started investing majority of my savings and my long-term investments into the stock market.
Right.
And that's when I actually started to understand more about how to practically execute trades and stuff.
Right. And what type of investor are you? Like, would you say you're more of a trader, midterm, long term? How you think about it?
I'm definitely a midterm and long-term investor.
Okay.
Yeah, because I don't spend a lot of time watching the market, so I've got a lot of other things going on that I can't constantly monitor the market.
And how long is your midterm positions? Like what's the time frame on those?
My long-term is at least probably like 3 to 5 years. I would say that's like my
nice.
Midterm, and long-term could be probably 10 or more years plus.
Okay.
Because when you're at such a young age, you don't really need that money right away.
Right.
And since I'm so young, I'm going to be working anyway, so I've got my monthly income covered. So all I got to focus on is just putting more money into this piggy bank and make it work for itself.
Right. And what's the difference between the midterm to long-term investment? Is it like a different allocation? Is it more aggressive? Like what's the purpose between the mid versus the long?
For sure, there's a very subtle difference, and often it may be hard to distinguish because they're often blinded by greed, and people often do take actions that are against their will. So, for example, for some people, the midterm definition could be different, because for example, a trader, his midterm position might be 3 months. When he's trading, he's making 10 or 20 trades a day. Midterm would be a long term for him. But for the common Joe, midterm would probably be around at least 3 years, and long term would be around at least 5 years. I remember after reading Rich Dad Poor Dad, the second kind of investment book, or the third one was like Guide to Investing. I don't think that was as good as a book than Rich Dad Poor Dad, but in that book Robert Kiyosaki talked about everyone needs 3 financial plans, and the one is the foundation. So that I think that is the just a vanilla strategy, nothing too crazy, something that would work long term and has proven to work in a very long term basis. And then the second one is more aggressive, and then the third one, I think it's the insider, more of more speculation or more angel investing, that type of strategy. And so that reminded me of the different layers when it comes to investing, not just having one investment portfolio, but different. And so when each month when $100 comes in, how much is going into which portfolio. For sure. If I were to summarize that book in one sentence, I would say that book has taught me that to continuously build assets and reduce liabilities.
That's Rich Dad Poor Dad.
Yeah. So if you haven't read that book, that book basically teaches you all the in and outs about constantly building your assets, and how assets you can make assets work for you. Right.
And I think it's also very important, what I took from that book was also the rich don't work for money, and the rich have the money work for them. And seeing every dollar as an employee. So if your dollar is just sitting in a bank account, it's chilling. It's taking a vacay. But if that dollar is in the stock market or in the game, as you have put it on the last episode, then it's working for you, even when you're sleeping. Those are great insights. Is there anything that else you want to share? Let's say how you started with investing, kind of your journey, before I kind of share mine.
Not much particularly about I don't have really a very strong experience, strong and solid experience in trading, but I do have a lot of practice with finance. So I look forward to share more about my trading experience in in the future. So
you mean investing? Investing because you don't trade.
Yeah. My investing.
Okay. No, but at least you got started. Was it in how old did you get? How old were you when you started?
I started forex trading,
Right.
but it wasn't investing.
Right. No, I mean investing. You started last
I
year.
investing about 2 years ago.
2 years ago. Okay. So you were 19, 20?
I was 19. Yeah,
19. Okay. And that was like second year university?
Yeah.
Okay. Cool. I think like for me, I just want to share a little bit of my journey so that, people know like where I'm coming from in my experience. I wouldn't say like I'm, very experienced. Like I have a friend that he started when he was like in middle school and he made, I won't disclose it, but a healthy amount of money, very, very early on. But I think for me, I would say within my peer group, I've started relatively early compared to people. And so I've started with Bitcoin first, in my summer, like in the summer of 2019. So after my second year university, because I read those books and my buddy Diego was like, hey, look into this. And I was like, okay, I don't really get it. Oh, actually, sorry, it's after my first year of university, I should say, after reading Rich Dad Poor Dad, that got me into the mindset. And then, so I bought Bitcoin and I just kind of like, it wasn't investing. I was more like speculating because I didn't have a plan, didn't have an intention. I didn't understand anything about it. But just to give some context, I was always a saver. I've saved like my Chinese New Year money, the money that the government gives us, and just little gigs here and there. Like I always save it and put it in my bank account, but I never knew how to grow that money. I know how to make the money. You put some side hustles, but once I have it, the only thing I know is saving it and spending it. But I didn't know how to let that money work for me.
I feel like that's like a so common problem that people encounter every day. And,
right.
I think it happens here in Macau as well.
Yeah, but here's the thing, right? Macau's like it's a very rich place. But we don't do a good job in growing, like letting our money grow for us, right? But once we unlock that part of the equation, then like it's a totally new level as well. And so
that might be why we don't have like a stock exchange here.
We should, man. We should. I think that's what they're planning, but we'll see what happens. And then after a year later, after I went to University of British Columbia in Vancouver and did my exchange year, and I came back to Macau and I started looking at the returns from my insurance plan, because my parents helped me bought an insurance plan that came with like an investment, and that bought certain like mutual funds and stuff like that. And I did some calculation. It was like it doubled the money, but in like 20 years it doubled the money, and the return was very bad, like 3% per year, 4% per year. I was like, damn, if I invested this in the index, in the stock market, it can get me 7.5. So why am I investing here? And I pulled all the money out, and I created like a stock account and starting buying stocks. And so since then, I think it has been almost 2 years since I made that decision to pull all the money out from that account, which is like a good sum. And that made me kind of start thinking harder about like where I should put my money, because it's one thing to have the knowledge, because I read the book, which we will talk about, Money Mastered the Game and Unshakable, but it's another thing about like applying that knowledge and be like, oh shit, okay, now let's do something, right?
Yeah.
It's two different
things.
Yeah. So I guess that's my journey. And then I also want to disclose a little bit about like recently also just helping my family, help them allocate parts of our family fund. And so I've taken that role within my family to help, my mom and my sister out, and to help them, just making sure things are in place for their retirement. So that was another step for me to like put in more time to understand about investments, because now there's a little bit, not just my own money, but my family's money on the line as well. So I think I just want to again reinforce that just because I have these experiences doesn't mean like what I'm sharing is right, but I just want to show that, hey, at least this is what I've done. So I'm not coming like, hey, I'm just bullshitting, but like this is from experience.
Yeah, for sure. Although we're not financial advisors.
Not financial advice.
Yeah, so treat these as educational content, and make sure to do your own research, because what we discuss is majorly from the past, and the past will never reflect the future.
Yeah.
And that's a huge misconception in finance, is
Mhm.
about predicting, and predicting often doesn't work, even for large investment banks such as JP Morgan,
Mhm.
Morgan Stanley.
Yeah.
Often doesn't
All those
work.
guys. Yeah.
I mean, they might have great talents that they can predict 50% of the time, but
Mhm.
you know, they can never predict the
Yeah.
future.
If they don't predict, they manipulate. But
Yeah.
that's another
That's
rabbit
another
hole.
another podcast talk about.
Yeah, but let's talk a little bit about like so that's our story. You know,
Yeah,
that's
our backstory.
That's the backstory. But like, why should we get into investing? Like, especially for young people. Like, what I guess, yeah, what should be the motivating factors?
I think the reason why people should start early is because of the compound interest, you know.
Compound effect.
Yeah,
Funny enough,
compound
right?
interest.
Yeah.
It's like when you start early, the compound interest just, you know, it can work on itself, and it will double, and
Right.
triple and quadruple.
Right.
The earlier you get into the game. So I realized that actually a lot of younger people right now are actually getting into the game at an earlier age, back when during my time. So
Yeah.
I see younger people at school, they're already
Oh,
trying
yeah?
to trade and invest.
Like in high school or what?
Yeah.
Really?
Yeah.
Oh wow.
Yeah, it's like it's quite fascinating to see how some of them are already at this maturity.
Okay. And I think it's because maybe like of the whole Robinhood app and like the Futo app that just makes like the UI, the UX is just so much better.
Could be.
Yeah. But yeah, definitely with the compound effect. But I think like a lot of people that do invest, like they are more like speculating. They don't have like a solid plan. Like this is
Right.
like 7.5. Like I want to have my allocation in different asset class in different industries in stocks. Maybe they just pick like, hey, Tesla, and then they hope it ride to the moon. And then when they don't really have a price target or like some rebalancing strategy, which we'll talk about in a bit, right? So I feel like maybe it's good there's at least in the game, but like those fundamentals must be there in order to not like fuck up, right?
Yeah.
Yeah.
I mean, if it would be excellent if they have read the book Unshakable at such a young age,
Yeah.
and followed those instructions,
Yeah.
and just hold index market funds, and you know, he'll be so much well off than someone who doesn't do it and does it at 40 or 50.
Right.
Because he's at such a huge head start from
Right.
those guys.
Right. We'll come to the Unshakable book in just a
Yeah.
bit. But another thing about when you talked about compound interest, and that's so true because I remember like plugging in some of the numbers on a compound calculator.
Yeah.
And then trying to like understand how much I need from a retirement fund. It's like from NerdWallet or something like that. And then you can see if you start like just a couple years earlier, it makes such a difference on your like return later on when you're like 60.
Huge difference. It's
right?
Huge difference.
Yeah.
Because those returns pay off during the 60th year or the 50th year.
Right.
They don't pay off during the first to 30 year.
Right. Right.
It only matters when you've been accumulating so much years, and those last few years, that's what counts.
And that snowball effect
Yeah,
will be crazy, right?
Right.
So, dude, this is a great reminder because, like, right now, let's say within the cryptocurrency market or whatever is doing so well, and like I'm like, oh, I want to like get a few more percentage points, but I gotta remember the longer game here, which is like when like down 10 years down the line or 20 years down the line when it's still accumulating those couple percentage points and still making that 7.5% or whatever our portfolio can help us achieve. That's when we make those big bucks. But that's the time preference, right? Like if you have heard like there's two type of people usually, right? The low time preference, the high time preference. High time preference are people that want it now, instant gratification, versus the low time preference people are people that are able to have that delayed gratification. And when you talk about like your midterm being like 5 to 10 year, whatever, like 3 to 5, 10, like that's pretty long for a lot of people. Like a lot of young people won't think that far away, but that's the type of mentality that we got to have, so that when we are 40, 50, you're like, you know what, thank you to that wise 20-year-old Sonny that helped me set this up, baby. Right,
for sure. That's like my strongest standpoint which is to, you have to be patient. You're only 20. I'm only 21 this year, so let's say 20 years down the line, I'm still 41. I'm still young as fuck.
Yeah, exactly.
So I'm still be able to work my ass off during 40. So I'm not worried about all my investment going bust at 40.
Right.
I still can work. I still can make. I can still work at the cafeteria, Starbucks, McDonald's. Earn minimum wage if I have to.
Right. And I remember, like, if you put something, I forgot the exact number, but something around like $300 US dollars, or around 2,400 MOP, into index fund that or your portfolio that generates like 7.5% per year, but by your 60th year, I think if you start at 20, you have like $1 million plus to retire on. So I think that was very intriguing. Like, oh shit, we should start now. Yeah,
I think that's what get a lot of people started, is what the end sum is. But not a lot of people understand like the process. The process is more about being patient and how you can control your emotions, and that's like another story of how that relates back into behavior finance.
Okay.
And in that study, people study how investors react in certain, market situations. And that's a whole new topic that we can discuss on another time.
And when you talk a little bit about like just being consistent, right? That kind of brings me back to, the book. One of the strategies they talk about is the dollar cost averaging. Kind of like purchasing the same amount each month, regardless if the price go up or down. And so like that's a very grounding strategy. So when it goes up, you're not too worried. When it goes down, you're not too worried because you're buying cheap when it goes down.
Yeah, for sure.
But before we kind of go into like how to start thinking about investing and all the more technical stuff, I also want to talk a little bit about like the why, which is very relevant in these kind of times at the moment, right? And that is also a big part. We gotta, instead of like thinking about, okay, we're gonna gain this amount of money, it's also very important to start investing to preserve our wealth, because in these times, right, the governments are printing a lot of money because of the pandemic and quantitative easing and stimulus and etc. So each time with more currency coming into circulation, that means the money that we have saved in the bank account, it depreciates in value, hence inflation, right? And we are not taught these kind of concepts. Even in business school, I never was really exposed to how like money is created. I think if you walk down the street, most people can't explain how money is created. And so coming from that perspective, like preserving your preserving wealth, right? Like I guess from that angle, why does it make so much sense to start investing?
I wouldn't say preserving wealth would be like the only objective of investing.
Right.
I believe investing has a procedure to it.
Okay.
Where each person has to go through and perform like self-assessment, which being the first is to identify your purpose, and whether this could be, saving up money for your down payment, buying a car, starting a business, or saving up money for retirement.
Right.
And whichever one that falls within your purpose of investing, then you utilize that idea and think, okay, if I need $1 million for retirement, or if I need $100,000 for this car, how much money do I need to earn how much money do I have to invest, and how much money do I need to get from this investment? And then you're going to decide, okay, am I a low risk investor or a medium risk investor, or do I need to be high risk, super high risk, to be able to attain my goals?
Right.
And then you go and decide, okay, you go find, and then you go approach your financial advisor. Okay, these are my plan, and which assets should you,
Right.
invest in specific assets, and these are advice that we can't give
Right.
because we're not professional
Yeah.
financial advisors.
No, I totally agree with like again starting with the end goal in mind, and then be very like mindful and considerate about how you should approach it, right? But that's coming from a gain frame. That's like, okay, I want this, and I want to calculate the numbers so I can attain that, right? I'm saying what I'm like going back to what I was saying with the money printing is that because if you want to buy that car, another approach is just to save and not to invest, and you still can buy that car, right? But right now, because of the money printing, saving is not an option already because you're losing purchasing power, like 7% per year because of the money printing. So it's forcing people to put their money into wealth preserve asset so that you're not sitting in your wealth is not sitting in a currency that is deflating over time, because all currency that is backed by that all fiat currency, I should say, right, that is not backed by gold or nothing, not backed by anything, eventually goes to zero, the value of it. So think about that, man. Like in history, all fiat currency fails, right? So but that's what most people's wealth is in, and they don't even know that. Although it says $100 and next month it says $100, but you're not able to buy the same thing with that $100 anymore.
Yeah, totally agree, and this is very well supported by how investment banks and all the banks in the world do their mathematical calculations, which is something called discounting.
Mm-hmm.
Discounting is basically taking your $100 today, and they're dividing by like a factor. So like it could be the inflation level. They would divide it by the inflation factor, and they will see, okay, in the future, how much is this $100 worth now?
Mm-hmm.
So this $100 could be worth 92, 96, and those banks will use that value to value a property or value their customers.
Mm-hmm.
So this is definitely a solid
Like point.
Yeah, solid point that
Right.
people could take away from.
Right. Yeah. So I guess like those are just the why. Then I guess right now we can dive deep into, I guess, the how of it. And we already have talked a lot about the book Unshakable and like Money Master the Game, both by the same author, very similar concepts. And I guess like, can you share some of the juice after, like, in that book that just kind of how did that book shift your paradigm into thinking about investing?
That book really gave me insight into how you could manage your money in the bear market, which is when the market is in a slump, like back in 2008, 2009, where there's financial crisis. That's an example of like a bear market where the stock market is incredibly going downward trend.
Mm-hmm.
It's really insightful how Tony Robbins,
Mm-hmm.
he mentioned that you should always be patient no matter what the market is currently at,
Mm-hmm.
and you should take advantage of the opportunities, which is also another ideology Warren Buffett constantly advocates for,
Mm-hmm.
which is to buy during a crisis.
Right.
And
Like be fearful when everyone's greedy, be greedy when everyone's fearful.
Exactly. And a lot of people don't know is that a lot of most of successful companies in the world actually do their IPO, initial public offering,
Mm-hmm.
which is when they go public into the stock market during a recession.
Mm.
So if you look at Google, if you look at Spotify, they went public during recession. So
Why is that?
That's when they take advantage of when the market is low and the fees are considerably less, and investors are actively looking for investments.
Mm.
So that's the reason why they take advantage of recessions.
Mm-hmm. Yeah. What other things that the book has helped you in terms of thinking about it?
I've also discovered that a bit more about mutual fund and index fund.
Mm-hmm.
Yeah. We're going to go back. This is one of the big big topics that Tony Robbins talks about is how the mutual funds do not outperform the index funds. Mutual funds is basically a company that creates this basket of stocks that they sells to their clients, and then these clients will then invest in this basket of stocks for a return, fixed or a floating return for them. And then this company who manages the basket of stocks would typically charge like a 1% to 3% range of a management fee yearly, and then it's also backed by a lot of studies in the financial field that accounting for the administration fee, they don't actually make any marginal benefits compared to the index fund. And in the index funds, basically, you don't have this person who's managing the basket, and they charge you like a 0.01% or 0.5%, which is significantly lower. Because if you take that to a compounding rate, that's going to be, significant difference. 1% compounded and 0.05 compounded. That's huge difference.
On paper, it doesn't seem like a big difference, but if you put on a calculator, like holy moly, like it's a lot.
If you take the power of that percentage to like 30 years or 50 years, you see a difference.
And just to give you some stats, I think in the book it says 95% of mutual funds don't consistently outperform the index fund, the market, right? I mean, it might perform well one year, next year, but it's about that consistency over time. So this is super important knowledge, right? Because going back to the first episode where we talk about like, if you read like maybe a couple books, you really can empower yourself so much. This is like one of those like rabbit hole juice, like, oh my goodness, why didn't anyone tell me about this like earlier in my life? And so that you can take that, money and say, hey, let me just invest in an index fund. And index fund is just like a bundle of stocks that there's a different types of index fund, right? The most well-known is probably S&P 500, where they bundle in terms of market capitalization, so how much they put together the top 500 most valuable company in the US into one I guess one stock, would you say so? And then and you just buy it, and that means you own a very, very little piece if you buy one share of all the
500 stocks.
500 stocks in US.
You own maybe like a 0.01% of 500 stocks.
Maybe probably less.
Probably less.
But
that's the gist definition for index fund.
But there is some people that say there's a bubble in index fund as well, because it's causing people to just like not think and just buy it, and then so it's like pushing the value into a certain like level that's unhealthy. But generally speaking, like that has been working, like buying index fund for the last how many decades, right? If you look at it as a very basic strategy, just buying the S&P 500 and having maybe a little bit of gold in your portfolio as a hedge. So in the book it talks about portfolio allocation, or before we talk about portfolio allocation, maybe we should talk about asset class. Like, what does it mean? What does asset class mean?
Asset class is basically dividing and dissections of different assets.
Investment categories.
Investment categories. So there are different asset class, such as like stocks, mutual funds are different assets, index fund is another type. And we've got derivatives. Derivatives is more like a very complex device that you can use in the market to take on more leverage, so take on more risk. And you've also got commodity, which is like physical gold, platinum, silver, copper, those kind of industrial metals that those are worth value as well. And right now the most trending is also crypto. Crypto is also an asset class, and people are heavily speculative about it.
And there's also like wine that you can purchase, that there's also real estate, there's also art, there's also land. There's a different types of asset class out there that has its own pros and cons. And also there's bonds, right? But like right now, bonds are not really looking that attractive at the moment because of the money printing and the inflation, etc. Right? But yeah, like I said, as we were saying, each asset class has its own pros and cons, and it's about having a bundle of them in a basket, so that basket is very secure. It's not heavily tipped into one asset class versus the another.
Right. So just back to the old saying that you should never put all your eggs in one basket, right? Because that's what we've been taught in the Asian culture. Just always diversify your eggs and spread them apart. So you're not. So when one of your basket tips, not all of your eggs doesn't crack.
Right. Does that apply to relationships as well?
No, I'm afraid not.
All right. But maybe it should, man. I don't know. We'll see. But where was I? Yeah, we're talking about asset classes. That's so funny, dude. And so I guess my question to you personally would be like, what's your asset allocation right now? Meaning like what's the for people that don't understand that term, meaning like what's the percentage in the different asset class that you're in?
My current percentage, well, just general, very broad percentage is a 50, 20, 20, 10.
Okay.
What I would call that is 50% in long term, very long term.
Okay.
And then 20% in medium term, and then 20% in short term, and then 10% in liquid cash.
Okay.
And through those percentage, I would then go and decide on which kind of stocks or which type of asset classes I would put it in.
Okay.
And then that's how I would go about it.
Okay. So let's zoom into like that 50%, that long term. Okay. How that asset allocation looking like within that 50?
All right. So into that 50, we're going. That's like. I'm going to divide. I also divide it into a few more sections. So like, I diversify on countries. So
okay.
I don't keep my stocks in the same kind of region, and also majority of my long-term investments are in index funds.
Okay.
Because back to Tony Robbins' book, Unshakable.
Yeah.
He talks about how index funds do outperform the mutual funds in the long run.
Right.
So I do find that technique and strategy very helpful.
Okay.
And I've also been doing a lot of research in that, and it's like a solid ideology that I have for investing.
Okay, so is like within that 50 is 100% in stocks right now?
No, not 100%. I would say within that 50, 70% is in index funds. And then I've also got probably 10-15% into crypto as well, because I do hold crypto for long term, because I believe it will definitely make an impact in our future society, and how it can really transform human society. Because there's so much cluster information and fraud, miscommunication in the financial society, that the blockchain technology can really fix.
Right. And then the rest what the rest, like I guess 15% would be in?
The rest would probably be in like safer assets, such as like bonds, some probably into some liquid cash, like it could be like a short-term bond.
Okay, so part of that there's 15% is in bonds right now for your portfolio?
So there will be around 70% in the index market, and then I'll put a few more, like 15% into stocks, like specific stocks, and then probably like another 10% in crypto. And then I'll leave probably like a little bit more than 5% in like spare cash, just in case I need to make any sort of adjustments.
Right. Wait, so when you say you will, so you haven't done that yet? for that?
Right now, I haven't done that because I know right now there's a lot of opportunity, so I'm putting a lot of cash into investments right now.
Not in the long term. What do you mean by that?
I mean, like, within that long-term chunk,
Yeah.
I do save like a little bit of cash,
Okay.
just in case I would like to fulfill any opportunities in the midterm or the short term.
Okay, I see. But like, what's your reason for holding bonds right now? If when I guess the, like it's yield it's like 2% like for a 10-year Treasury for the U.S. and then maybe inflation expectation. Like they say the CPI, which is Consumer Price Index, is like 2.6% I think recently. But obviously, we all know that the Consumer Price Index is like, it's called another saying, from Mike Maloney from goldandsilver.com is like price CPI, right? So I'm just wondering, like, what's the rationale behind holding bonds?
For me,
Yeah.
I don't hold government bonds because obviously it's only 2%, and bonds form a small portion of my low risk portfolio.
Mm-hmm.
So I do want to kind of balance out that stock risk exposure, because stock is considered medium to high risk,
Right.
depending on whichever you pick, right?
Right.
So even if you pick the index fund, that is considerably more risky than
Right.
a bond, because they're not obligated to pay stockholders, but they're obligated to pay debentures holders.
So you're in corporate bonds.
I'm in corporate bonds.
Okay. And what's corporate bonds yielding like?
Corporate bonds, it really depends on the nature of your company as well. Because,
Okay.
Let's say JP Morgan right now is probably around 4%
Per year. Okay.
4% per annum, and we're looking at probably like a 8-year or above
Okay.
maturity.
Okay. So, okay, I mean, for me, I'm not in corporate bonds, but
Yeah.
that might be an interesting thing for people. I mean, that everyone has a different kind of preference and stuff like that. For me, I'm more in the precious metal, but precious metal and gold and silver has actually not done so well, because actually, JP Morgan has actually been fined for suppressing, I think silver prices in the past, right? And so I think that's still like a continuous thing that's going on. But if there was a rebalance of all the money that's printed, gold, silver, and Bitcoin, all these like very scarce asset would have a price readjustment. And so that's one of the things why I kind of hold that, I guess, in my portfolio as a long-term hedge against monetary policy.
Yeah, we can go ahead and talk more about like how Bitcoin could be a hedge, because like Bitcoin is definitely not as correlated with the stock market, and we're gonna right now we're gonna dive deep into more the logistics and of crypto, right?
Yeah, we could, but like before that, maybe I could share a little bit about my asset allocation so that people kind of have like understand like what I'm into. I have like around that 10 to 15% in liquid cash right now, just kind of chilling, seeing if there's any opportunity. So if it dips, then I can kind of go in. Around 15% is in precious metals, and I have two types of precious metals: gold and silver, and then gold being 60%, silver being 40% within that 15%. If I have to buy more precious metals, I probably would buy more silver because of one thing called the a gold to silver ratio.
Right.
So it's like how one nugget of gold, how many pieces of silver how many ounces of silver you can buy. And right now, I think that ratio is around like 50-60, but the natural production is about 1 to 14, and that should be around the price as well. So I feel like there's an arbitrage there, but obviously we'll need to wait until that would kind of revert back into its intrinsic value. And then I have around I think 15 to 18% in the stock market right now, and I bought a ETF that I like is like a water infrastructure ETF. I think is FIW. Oh, by the way, maybe for the people that don't know, what's the difference between like an index and ETF?
An index fund and ETF could be essentially the same thing.
Mm-hmm.
What a ETF is, it stands for Exchange Traded Fund, which essentially is a fund that is traded on the stock exchange, and you can easily purchase it if you have a stock account. But there are two ways of where you can purchase index funds, which is one, you could go to the company, just show up, talk to a manager and claim that you want to acquire assets of this kind of index fund, or you would go to the stock market and you will look for the same name of the fund and to check if it's listed on the stock market. And if it is, you would purchase that index fund's ETF. So ETF is just a classification of a fund. And the ETF could be a mutual fund as well. So make sure when you're investing in index funds, you make sure you're not investing in a mutual fund as well. So you got to distinguish between them.
I see. Yeah. But I was I have like a water ETF that I have, and then also Vanguard is actually a very good company that has a lot of index fund. And in the Vanguard website, right? Maybe we can link this in the YouTube description down below, right? There's a page where you can see all the different types of like index that they have that's like specialized into one thing, like material index fund or healthcare index fund or technology index fund. So it helps you get into like industry exposure quite easily, and that's how I like to. I'm in, I think, materials or the consumer staple. Like I'm in the supermarkets and
the
stuff
consumer
like
industry, right?
Yeah, consumer industry. And then I also bought a little bit of stocks, buying like your country exposure into like the India index fund, like tracking the top 50 Indian companies.
Right.
And then what else do I have? I also recently bought like also a agriculture kind of ETF. And then more of my high risk is in ARK Invest. I think they are more. Is ARK Invest like a mutual fund? How would you classify them as?
I would say they're another type of like a infrastructure, like ETF. Like they're in a different section.
Right.
But I don't think the people they don't have to worry about that too much because it also classifies under that ETF.
Okay, yeah, but like part of it is an ARK ETF, which I love Kathy Wood's approach of really investing in disruptive technologies. But some people say it's overvalued, but like I think for me that's a small percentage of the more high risk stocks. And then the rest is in crypto. So a large majority part of my portfolio right now is in crypto, but I think for me, I'm waiting for the next kind of like bull cycle that ends in December of 2012, and then I'm going to reallocate 25% from my cryptocurrencies into probably more precious metals, especially silver, and then maybe some real estate opportunities or maybe some wine opportunities if I see any, or even some local businesses here in Macau. So I'm still searching how I can reallocate parts of that fund right now.
For sure. I would say, artwork could also be like a different investment type that you could go for, or like start a business.
Right.
That could also allocate into your whole portfolio. Like, start a business is risky and it's most likely going to fail, but the rewards of a startup business is, it's crazy. Dude,
that's why I'm thinking like if I want to put some into Divicati, but then I don't really know like how I could, and like I obviously know how I can invest in the business, like what parts of it, but like I probably need to spend more time saying, hey, I'm going to invest this amount. I'm going to like, it's kind of weird, but yeah.
Well, just get started with your Divicati bank account and, put some funds in there.
There is one. Yeah. So. But yeah, that's for sure. But let's see. How about let's go for a little break and then we'll come back. We'll talk a little bit about the practical steps that we could start doing to start investing. How's that sound?
Yeah, sounds great.
Okay, cool. BRB. Hello, welcome back to the second half of the podcast. Episode 15, second half, we are with Sunny, and we're going to talk about the practical steps of how to start, I guess, investing. But before we kind of dive into that, why don't we, can you tell us a little bit about audience about the all-weather portfolio that Ray Dalio talks about in his book? Because I feel like that kind of gives a nice little structure on like a diversified portfolio, and then we can talk about how to actually construct that portfolio.
Do you mean Ray Dalio?
Yeah. You know, in the book, did they talk about the all-weather portfolio?
Right. So, when constructing your portfolio, you would really want to first diversify. Second of all, look for risk assets that are risk asymmetrical, which means that the rewards that you're getting for the amount of risk you're taking is not symmetrical, which means that for 1 cent, for a low risk asset, and you're getting a reward that is a medium risk asset.
Right.
That's a definition of finding a asymmetrical risk reward asset.
Mm-hmm.
I know it might sound difficult to understand, but which essentially an analogy for that would be like you're buying, you're at the supermarket and you found a fruit that's cost you less for such a, it's a good fruit, but it costs less than the market price.
Mm-hmm.
And essentially buying that is already a profit for you.
Right. Because you have that like built-in equity there.
Yeah.
Okay. But yeah, you were saying the risk uncorrelated assets and then the asymmetrical reward. So those are the things that we should think about when we think about how to construct a portfolio, right?
Right.
And I think in Ray, he talks about a couple of different asset class, and bonds being one of the heaviest things that people should invest in, and then as well as I think it was gold. But right now, recently he said that 20% of people's portfolio should be in Bitcoin. I think I saw that on an article somewhere. And then what else does he put? I think 40% is in stocks, and then he would mostly gravitate towards like the index fund that we talked about earlier. So that is kind of like his construction. I think there's a couple one out there. It's called the Dragon portfolio. That's a little bit more advanced, and then also like the Golden Butterfly portfolio. So there's a lot of different portfolios that people can kind of like look into and see which one that fits them most. But Ray's portfolio, the reason why it's so popular is because it's all weather, meaning it performs decently well, consistently, in all market conditions. It's not going to give you the highest return, but it's definitely one of the more stable ones out there.
For sure. And that's what the common Joe should look for, because you don't have the specialized expertise in finance that gonna make you the big bucks, but you're looking for that. You're looking for that money to work for you. So I think that's like a good benchmark that people should aim for, and not be greedy upon that.
Yeah. So yeah, let's talk about how to actually start like constructing. Like, let's say, hey, after this conversation, like, hey, Marco and Sunny, like, I would love to start investing. Like, what should be the first, like, actually the first thing that people should start doing?
First thing is definitely pull out a paper, pen, write down your purpose. Then you're gonna decide to attain that. How much money do you need, and how much money are you willing to invest? And then you're going to look at, okay, if I have this goal, which is $100 or 100 million, how can I get from 100,000 to 100 million? Do I have to be low risk, medium risk, or high risk? Then you got to determine that. After you determine that, you write it all down on the paper. Are you medium risk, high risk, or low risk? And then you're going to decide, okay, what type of assets should I be looking for? And then you're going to go and take some research and time to look at what kind of portfolios are out there that fits into my risk level. And then you go and do your company research, stock research, your mutual fund or index fund, whatever asset classes are out there. to understand which type of specific companies that fits right into your slides, right into your portfolio, that's going to help you achieve your goal.
And I think also the time horizon there is very important. Like, is it a I guess like a 3-year thing or a 30-year thing, right?
For sure. Cause
yeah, go ahead.
Yeah, you gotta also determine what's your priority for money. Do you need quick cash, or is it something that you don't mind waiting it out for some rewards?
Yeah, 100%. And so, once you do that, then what would be, I guess, the second step once you kind of figure those things out?
I would, get educated in, what's about the financial field, and then understand really how stock market works, and what stock markets are, and what are their primary functions. And then once you have a good grasp of how this financial industry and how this game works, then you can go and put in some real money. And that doesn't take a lot of time. It just takes probably less than 30 minutes of just browsing through internet and really understanding how people describe how this money game works. And then you can go on to, okay, which sector am I looking for? So there are a lot of sectors in the world, such as like the consumer sector, or there's supermarkets, companies that are on the stock market, or there are like the technology sector, such as like Zoom conference meeting, or Microsoft, Apple, these kind of different companies. They have their own characteristics.
Right. And if you don't want to do that research, then you can just go to the index fund. That's why the index funds are so good in that sense, right? You can buy I guess, what is it called, like consumer communication kind of index fund from Vanguard, and which will probably have those technology companies that you like in them. And so, like, in the sense that you don't need to guess, you don't need to pick one company and make sure that company wins, and you don't have to watch that basket very carefully, but rather that risk will be spread across different ones.
For sure.
And before I forget, I just want to hint, or I just want to talk about a really good resource that I found that kind of talks about why we should invest. I forgot to mention this, but it's called The Hidden Secrets of Money by Mike Maloney from Gold and Silver, that channel, because it's actually a very well made animation series, all 40 to 50 minutes each on this episode, and it goes from how the money system was created from the Romans until now, and the different similarities. Before you said that you can't really look at the past and predict the future, right? But sometimes we can look at the history and extrapolate, oh, this is the same thing that's happening. Most likely, if history repeats itself, this is what's going to happen, and we're going to prepare ourselves. And after watching that series, that helped me understand more of why we need to get into asset class that are rare, like land, precious metals, as well as BTC. But I just want to put that in before I forget.
For sure. Totally agree.
Yeah, but let's you were saying about starting after writing that and just getting some educational resources, and then I think the third step that I would say is just start creating the accounts. And the research process will probably take a long time, understanding which stock market, which I guess asset class you want to get into, and then which kind of exchanges that you want to kind of go into. I still remember when I had to set up my stock account. That whole process, I don't know how long it took for you, but it took me a couple weeks just to get the right government identification from this department, and then going to here, getting that department, and then uploading it, and getting rejected, uploading again, and then just all those logistical
For
stuff,
sure.
right?
I've definitely experienced the same thing with my several experiences with the past brokers I've worked with. I wouldn't say that it's hard to get an account, because people often right now are afraid to get started because they find the process difficult, and they're scared to put money in the market, put money in places that they don't know what's going to happen.
Right.
So I would say, I agree with you that, during the process of research, get your account, set up first.
Right.
Because if you're already decided that you're going to invest, it's part of the process, and let that process run by itself.
Right.
And in the meantime, you can do research.
Right. And the reason why you got to be in the game is because the worst thing to do is to not be in the game, as the book, Tony Robbins has talked about, where the gains happen in that period of time. If you miss those couple of days, then it really affects your return in your account.
Yeah, for sure. I remember him saying that most of the returns during the whole fiscal year, is driven by those few days, like 10% return during a day, or like 20%. And majority of those days are just fluctuations. So like a percentage increase today will probably be another percentage decrease tomorrow, so that'll even out. But then what the gains are those days that actually just spike up. And so you gotta be in the game constantly and consistently,
right,
to be in to be able to enjoy these rewards.
Right. You don't want to be in the sidelines and be like, I should have went in, right? So it's like having that set up as soon as possible. So the first step is like understanding the purpose, putting in a plan. The second is like start researching, and start researching, getting more different resources. The third step is like start setting up the account, and then I say, what would the fourth step be for you?
The fourth step would be like a feedback loop of continuous just education and research about a market or asset class. Also on like how you can better improve your portfolio according to the market situation, or how you can adapt. That's a continuous process for everyone who's an investor. And from there, you're pretty much set. Your investing journey has started actually.
Right. And I think writing those purpose down is very important, because sometimes when you are in investing, it's such a numbers game where you're looking at numbers, it goes up a couple of percentage points, and sometimes you just get lost in that very minute detail of things. And it's very important to like come back to that purpose statement and understanding what's the reason you're investing, because when you're investing, it's very easy to, I guess for me, speaking from perspectives, like getting very chased into like, hey, let me generate a couple more percentage points, but you're taking so much more risk. But it's really about, hey, you know what, I'm investing because I want to save up for my travels, or I want to like go for I want to buy my mom a really nice house. So now you're not connecting. When you're investing, you're coming into the investment with that energy, with that love, instead of like thinking about, it's just a pure like greed kind of thing. You're not driven by that emotion. So I feel like that's very important, that like spiritual and personal development perspective on going into investing.
I think what people, when they have their ego with money, it's often not what money is often not what they really want. It's the experience of acquiring so much wealth is what they actually want to experience. So I would say that, again, back to the point where you have to be self-aware and be patient about it, and really go back to center about when you're lost. You have to go back to center on why are you actually investing. That's why I made you write down those purpose on a sheet of paper, so you can always constantly go back and look at, okay, even though if I'm suffering these losses today, okay, I know in the long run, in my 10-year investment, I know that I'm confident that this will correct itself, and the asset will go back to its intrinsic value.
Right. That's so important. And so perhaps let's move a little bit into like the tools that we like to use so that people can, get a sense of like, okay, where, like, let's say if I started investing, which tools I could, look into. Oh, by the way, before I move on, I also had that one insight is like sometimes within the analysis paralysis, we feel like we're not ready to make that investment. Like a little tip that I got before was just like put a little bit of money in, like put like, a couple $100 in, and when it's in, because your money is at like a risk now, like you get yourself more motivated. So don't even think about it. Just buy a very small percentage of it and just like, fuck it, let me just buy it. And then that would probably motivate you to like do more research into it.
For sure.
Yeah.
Another great lesson I would, encourage people is to do, if they're not, they don't have the money yet, like let's say they don't have like a bulk saving yet, I recommend just putting in small chunks and put in as much as you can, and also, experience the emotions of trading, because there are definitely human emotions during trading.
Investing
and trading. And when you look at those losses, you gotta know how to readjust your mindset, and that's like the biggest takeaway when it comes to investing is, can you control your personal egos and emotions during those times?
And there's also the I guess the concept of like rebalancing. So let's say you determine that 40% should be in stocks, and then let's say it went up by a good 10%. Let's say you rebalance quarterly or every half year or once a year, and then so let's say it went up by 80%. Went up by 20%, right? And then so now you can get that 20% and like reallocate into other asset class maybe that fell, so that you're always kind of balanced. You're not very tipped to one side or the other.
For sure.
Yeah. So yeah, that's just the rebalancing.
That's one technique of one investing technique that people can use is rebalancing.
Any other strategies that you like?
For common, what I've used on a daily basis is I use like an Excel sheet, and I do keep track of my investing history, just in case the platform runs like on a shutdown or some kind of systematic failure. And I always have in track of, okay, what does my portfolio look like?
Nice. And how's it doing so far, man? Like
it's looking pretty good.
Okay.
It's at the greens.
I was at the greens. Okay.
Yeah.
Any percentage points that you can disclose?
I could disclose my current position in Neo, the China version of Tesla, who's trying to challenge Tesla by entering the European market right now. It's currently my position is currently in the reds.
Okay.
It's about I believe like a 15%, negative 15% return on that. But I'm not too worried about it, because back to it, I'm in the long term, and I think this company is going to make an impact in the electric, automobile industry.
Right.
And I know that by looking at their financial statements, I know they're growing and they're getting out of the negative profits.
Right. Got you. Nice. So let's move a little bit into tools as mentioned. Let's maybe first start up with the stockbrokers that we use. I use IBKR because it's like you can buy a lot of different international stocks, and then it's their management. I mean the transaction fee is actually very low, but I don't really like the user experience. Sometimes it's a bit, I guess, it could be a little bit better. But other than that, like I'm decently happy with my choice so far. How about you? Like, what do you use?
My first experience with stockbrokers was actually the same one you use currently.
Oh, IBKR.
So I actually use IBKR for the first year I've for my investing journey. And right now I'm using a Hong Kong-based stockbroker. It's called Futubu, but for North America and South America, it's called Mumu.
Okay.
So it's essentially the same company, but they just have different names in different regions.
Okay.
The reason why I chose to use this is because I'm starting to diversify my assets into the Hong Kong Hong Kong market.
Okay.
So I'm trying to take advantage of its no commission in Hong Kong stocks.
Okay.
And yeah, but I think it charges a very low commission for international trades as well. So it makes sense for me to transfer into that. And I currently still hold most of my my US stocks in that broker.
In IBKR?
No, in Futu.
Okay.
Just so it's easier for me to manage to sell or rebalance.
Right. What's your reason to get into the Hong Kong market a little bit more?
I'm trying to diversify in terms of region. So in terms of currency and region, because I've been holding a lot of American assets.
Right.
So I'm trying to in case America does.
But why Hong Kong? Why not like Europe or India?
I'm starting with Hong Kong first because it's a closer area where I'm a bit more familiar with instead of like India where I have no clue how the economy works.
Right. I understand.
Yeah, and Hong Kong is a place where we're so close by and we know how Hong Kong is like and how it kind of operates. Yeah. Because I've been in Macau for my whole life, and I've been in Hong Kong many times. Right.
And then so I'm not sure. Have you used portfolio visualizer before?
No.
Oh man, dude. After I realized that portfolio visualizer, shout out to Ethan. I think he showed me that. It changed the game, because what that portfolio visualizer allows you to do is to back test your portfolio. You could, let's say you chose the different percentage points of each asset class or each stock. You can plug it all in, and then you can like have 3 columns where you can adjust the percentage on each kind of asset that you want to invest in. So let's say you got the index fund, S&P 500, Bitcoin, and then let's say, I don't know, government bonds or whatever. And then now you can play with the percentage, and then when you press, it would it'll gather all the data and it'll show you which portfolio like does the best. And so obviously, that doesn't prove anything that future would be the same, but it gives you a good idea of like how your portfolio would perform. So that tool was like, ooh, so good for me.
That's really cool.
Yeah, I can send you the link, or I'll link it below. Yeah,
that'll be really cool for first timers to understand like how it all kind of take a step back and how this all works. So.
Yeah. Because it has like, you can see some years like the worst year minus 16%, the best year like up 9%, but like average 5 years like 6.7%. So it's like, okay, like
pretty solid.
Yeah, something like that. That was just made up numbers. Yeah, man. And then any other tools that you use like on a very like day-to-day basis?
That's pretty much it. It's pretty. If you were to use the Excel, your portfolio visualizer, and
stock exchanges.
Just stock exchange. I think most of the stockbrokers right now, they have pretty much a lot of internal services like management tools. So like you can easily transfer Hong Kong dollars into US dollars within the app. So it's easy for you to quickly access like different markets. And that's like another perk for when you're looking for stockbrokers. But also that's in the stock world, right? Like with I guess the cryptocurrency world, I personally use 2 apps 3. I use Coinbase for some of like smaller purchases here and there. Sometimes when Binance does not work, I use Coinbase. I have Binance. I love Binance because of its deep app. Like there's so many things that you can do. You can earn interest. You can actually borrow on Binance. You can stake coins. You can mine coins. There's like liquidity pools. You can swap. Like it's just so deep. You can, in some areas you can even get like a Visa card on the app. And right now they recently launched like a tokenized stock where you can buy a tokenized Tesla on Binance, which is crazy. So I think they're gonna list more and more stocks on that exchange as well. So that's how like crypto is eating the world in a sense. For sure.
And then another app that I like to use is Celsius. So some of my Bitcoin, I put it in my cold storage, which is like a hardware wallet where people can't hack. But part of it, I put it on Binance for easy trading. But part of it also put it on Celsius, where it generates like a 3.5 to 4% interest per annum, but that interest is paid in Bitcoin. So I'm making, compound interest, free money on my Bitcoin. And the crazy thing I told Sunny before as well, is that you can lend. I guess you can use your Bitcoin as collateral and take out a loan. So right now Celsius offer a 1% loan for if you have a loan to value of 25%, meaning for every $100 you take out 25, you can borrow $25 at 1%. So yeah, those are my kind of like more crypto based tools. But yeah, what about yourself? I know you use a couple of different ones as well.
Obviously, I was first introduced by your Celsius, and then that got me quite interested in these kind of apps that give off free interest on cryptos. So right now, I've actually found another platform that gives a better interest, but obviously it takes on the other. The cons of using this is that it takes the liquidity of your Bitcoin, so you're not able to transfer Bitcoin as frequently. So
it's locked, right?
Yeah, so it's kind of like a bank deposit you would put in this crypto app, but it gives you a better interest. So it's currently giving me about like 12% per annum.
Yeah, that's crazy, man. Like it's crazy because like on Binance, there's like if you look at earn, and then there's like flexible earn, and in there's like a digital version of British pounds, right? Great Britain, is it Great Britain pound?
British.
Great British pound, yeah. And it pays 5% per annum. So it's like, what the fuck? Like, why don't people just take a small chunk of their money that they don't use? Like, you don't even need to invest. You just put it on Binance, and then you just put it into this flexible savings, and you get 5%. Like that's free 5% that you can do. You don't even need to like take out any risk, right? So that's crazy, and that's the reason why I'm not in bonds, because I can just do that and make 5%.
For sure, but I think what people like, it does sounds very pleasing and easy, but what people should also know on the other hand is that that this Binance company, it could go bankrupt tomorrow.
It can get hacked,
who could bust, or you can get hacked.
Yeah.
Who knows what's going to happen? But if your portfolio suits these kind of risk level that you can tolerate, then go ahead and use those strategies that Marco has just mentioned. So
not for everybody,
but you also, at the end of the day, it depends on your risk tolerance.
Yeah. But we didn't have a chance to talk about like Bitcoin a lot. I guess those are the tools, and then you can look into it, see which one works for you. And also there's also educational resources. Obviously, layinvest.com is a very good beginner friendly starter pack. A lot of little guides, easy read, couple minutes. So yeah, definitely check it out. But if you're looking for something like a little bit more, I guess, technical, there's also Real Vision Finance, which I really like. They have a lot of different like free interviews online. But for you, is there any resources that stands out for you?
Currently, for me, not much. I would say Tony Robbins is a good start for most people to just understand the money game. The technicalities, it's not as important as mastering the mind.
No, I think that's totally, like, I totally agree, because once you get that foundation, then like that would be the most, I guess, like the biggest knowledge gap. Once you have that knowledge, and the other ones are just more like incremental improvements.
It's like a exponential curve where once you master the mind, everything else about financial literacy, it's just like it slowly grows, but it's not exponential.
Man, it's so important, man. Probably if there's one book you gotta read, is that book, because after you read that book, if some banker or some, like, I don't know, people that's trying to sell you some shit, like, you can call bullshit. Like, you know.
Yeah, man. One of the things I see in Macau is how these insurance agents just show up at the cafe, selling these annuities or bonds or index baskets of stocks to investors, trying to they're giving out false information. And I'm just sitting on the side, man, and just listening to these kind of people. Like, I feel bad for people who's believing what this agent's giving out false information.
Right. Okay.
And, I just felt the purpose of educating these kind of people and helping them.
Right.
Because no one deserves to be treated like that.
Right. Yeah. 100%, man. So yeah, dude, good on you for taking that. I guess seeing that as your mission and then doing something about it. Yeah. I think I think you're doing a good job. You're reaching a lot of people. In your peer group, you're seen as a leader on this little niche, big niche, but
Because personally, I've interned at AIA Group, which is one of the largest life insurance company in Hong Kong.
Right.
They're actually the top 10 most valued stock in Hong Kong exchange.
Yeah. Yeah.
So what I've learned from that is that actually most of these financial advisors, they're not financial advisors.
Yeah.
They're sales.
Yeah. Yeah.
And they claim themselves to be, senior financial planner.
Right.
And they've got these, fancy titles like MDRT. Something like that. Something that sounds credible, but they're not certified.
All right. I hope we're not offending anyone here, but that's the truth, though, right?
Well, that's the truth, man.
Okay.
Truth hurts.
Okay, sometimes.
Yeah.
But yeah, in terms of BTC in general, I just want to talk about Bitcoin, not the other ones, because that's the main one I think people should focus on if they think about crypto. At least starting in the game. What do you like about it? Why you're in it?
Okay, I agree 50% with what you just said. On the other part, what I also advocate for is people should also look for Ethereum.
Right.
Because Ethereum is, basically Bitcoin 2.0. It's improved version of Bitcoin, and it has so many functions that Bitcoin can't do, such as smart contracts, which is like dApps, which is essentially applying this technology into other fields, such as how do you know that the baby milk formula you're getting is actually from Dutch or from Holland that's claiming. You never know, right? It's just written made in Holland, but is it actually made from there?
Right.
But with Ethereum, if this distributor uses Ethereum to process its shipments, you can use blockchain and backtrack that this milk formula actually does come from this country.
Right. But the thing about it is with Ethereum and Bitcoin, they're not trying to be the same thing, right? Because Ethereum essentially is the platform where things get built on, but Bitcoin is trying to be the internet, the currency, right? So I'm not saying Ethereum is not good, but I'm saying people should understand Bitcoin's value proposition and be in Bitcoin before moving into other altcoins, if that makes sense.
Yeah, for sure. I agree with that as well. I think what people should look for is how Bitcoin is the largest market capitalized coin. Yeah. And there's a lot of liquidity in the market, and when you're investing in such a large capitalized coin, you're not worried about it being going back to zero in a few months or in a short time frame. So it gives investors the confidence to put in money anytime.
Yeah. But for you, you alluded to earlier is that you like Bitcoin because it's like a diversification of asset. It doesn't correlate as much with other things, right? But what else do you like about it?
Actually, through my research and a lot of past studies, we found that Bitcoin and Ethereum has a very low correlation with the stock market.
Yeah.
And what I like about it is that it's not correlated, and it gives me the power to diversify my portfolio. And when, you know, such as now, we can see why Elon Musk has, you know, put in a fraction of Tesla's cash equivalents into Bitcoin.
Yeah.
And essentially his purpose is to, you know, hedge against the market.
Right. And he put like the cash reserves into Bitcoin, right? Because he knows that the money that Tesla is making or trying to use in the future is losing that purchasing power because of the excess money printing. I think like 40% of the US dollar is printed in the past 12 months or something crazy like that.
It's crazy.
And even in Australia, I've seen a chart just yesterday when it went up like a straight line in terms of how much the central bank has printed.
An analogy for how much money the US government has, you know, put in for printed for quantitative easing would be like, imagine stacking $100 bills from the ground of Earth, and it will reach literally the moon.
Wait, like when
the amount of money the US government has printed for quantitative easing,
right, since last year,
for COVID,
really,
is essentially putting stacking $100 bills, $100 bills,
wow,
and it would literally reach the moon.
That's crazy, man.
That is crazy.
Damn, that puts it into another like perspective when you visualize that, man.
Yeah.
Wow, that's a good little stat right there. And so yeah, because Bitcoin
and that doesn't come from me. It comes from, you know, some an article I read.
Yeah.
So.
Yeah, but I wouldn't be surprised with the fact. But that's why, you know, gold, silver is hedging. It's a hedging because it's a rare asset, right? But Bitcoin is emerging as that new reserve currency, where if this fiat currency system fails, it has to go back into some sort of standard. Used to be gold, but it seems more and more likely that Bitcoin would be that new reserve currency. We're still very young, very early. Like we're only like 12 years in the game. I mean, since Bitcoin was born, but it's the fastest asset class that has reached 1 trillion market value, and there's only 21 million Bitcoin ever is going to be circulated. No one can, you know, the monetary policy is very transparent. There is the halving cycle every 4 years, so it's like it's deflationary versus a fiat currency system where it's inflationary, because the amount of US dollars or any fiat currency in general is infinite, right? Because they can print more. They can print to the Mars tomorrow. No one fucking knows, right? Like no one can stop them if they chose to do that.
For sure.
And so that's why it's so scarce. I think there's a stat or something saying that if you divided all the Bitcoin in the world, obviously there's not going to be enough Bitcoin for every millionaire in the world, because there's like 50 million millionaires where there's only 21 million BTC. So those are some of the reasons why, you know, BTC is so valuable. It's super rare. There's not enough Bitcoin to go around for every millionaire. And then if you divide it, I think it's on per person around the world. And keep in mind that there's still people being born every single day, right? I think it's like 0.001 Bitcoin per person per. So it's a very low number, basically. So I think if you put in like $200 or something like that, you can have more than the average person. So it's such uncorrelated asset class, and it's something that no one can have control over. And it's the first time we have a very decentralized monetary system where it seems to have a lot of promise. And so I think like those are some of the reasons why, you know, Bitcoin is so great. And like you said, it has such high liquidity, and it has a lot of different fiat on and off ramp, right? You're trying to buy Hong Kong stocks because part of the reason you're trying to diversify against currency risk, right? But when you purchase Bitcoin, when you sell it, you can go to like Nigerian dollars, you can go to Hong Kong dollars, like Swiss francs. So it's like so many different avenues that it can go to. And not to mention, like the real good part about BTC, it's like it's 24/7. like 7 days a week, and 365 days. It never had a down day since it came online. So it's crazy. It's constantly liquid.
For sure. That's like another another like a target that it meets as a potential currency. Is that it's so liquid that we can potentially use it as like an alternative source of currency.
Right.
And Tesla is already offering as Bitcoin as a source of payment.
Right.
You can actually buy Tesla cars using Bitcoin.
And I think this is a very important fact to remember, that Bitcoin is always evolving. It's always there's always new things being like upgrading. Like the core of it won't change, but there's like very important like upgrade, like Taproot or the Lightning Network that's building on the side of Bitcoin or on top of Bitcoin. And so like the Lightning Network enables almost instantaneous not settlement, but like transaction, and then later on it will get settled. So those are the things I also look into, because that that adds value to the currency system, and then if it succeeds, then this would elevate to a whole new stand versus gold, right? It's kind of stagnant. It doesn't really change. It's very stable, but it's not going to improve any much more, right, in a sense. But anything you want to add to that?
That's a lot of information. I think that's a solid foundation for people who's just getting started into investing in Bitcoin.
Just summarize, like I guess I could say, like, I like Bitcoin, and I think it has a lot of potential, and there's always so much more to learn. Like there's as you dive deeper, you're like, oh shoot, like I didn't know about this. There's so much angles that we can appreciate that asset.
We can go on and on about like cryptocurrency. Because there's so much more we've not explored as well.
100%. But I guess like there's just so much that you can do with it. It's such a unique asset. You can invest, you can earn interest, you can lend it out, you can borrow against it. So I think it's just the whole like blockchain cryptocurrency world is creating like a two parallel financial systems, right? There's the traditional systems with the stocks and the bonds and all that, and then there's this new system where it's actually happening 24/7 on the internet, and people are creating companies with like ICOs and stuff like that from this system. So it's like this new system is worth around 2 trillion right now. Obviously it's still super small compared to the traditional financial one, but this is really taking up momentum, because I don't like, at least in my friends group, like no one's buying gold, no one's buying silver, no one's really, like, some bought stocks, but now they're all in crypto.
So
it's like that's a thing. That's crazy.
That's incredibly crazy. I'm sure this is also the same momentum for everywhere around the world, because we do see there's a large influence after Elon Musk has purchased crypto, and that has caused another wave of investors pouring money into crypto.
And also what happened in GameStop, where they stopped they halted the trading,
right?
And so like people are like, hey, you know what, like fuck this system, let me move to a system where it's decentralized and there's not one like party that can control how the game is set up and played, but rather like it's the people, it's the protocol that's able to like determine the rules, but not like a couple of people in suits in the closed boardroom.
Right. And everyone nowadays just trying to get more freedom.
Man. I guess that's human nature, where we are all, I guess, shared in a sense, right? Liberty, sovereignty. But let's wrap it up a little bit, and perhaps we can kind of just summarize the things that we talked about, and especially how to get started. So the first step.
So going back to the beginning where we've discussed how you could start investing, the first step would be pull up paper, draft your purpose, and then determine your risk level, your forecast, your investment horizon. So how long do you plan to invest, and how long do you need this money? Is this urgent, or is it not as urgent? And then from there, after you determine your risk level, you would want to see, okay, what kind of portfolios do I want? You go do some research and like, okay, which kind of asset classes am I looking for? And in the meantime, you will also want to set up your stock brokerage account,
Right.
Whichever country or city you're at. Go do some research which one has the lowest commission, or which one that is that has the advantages that people are in favor of.
Right.
And then from there, you there's just a constant feedback loop of improving your portfolio and constantly looking for risk asymmetric investments, and you'll be on and on.
Yeah. And then there you could also, use the tool that we mentioned before, trying to plug in the portfolio visualizer and kind of play with it, and then also check out, the different resources like Real Vision or, Hidden Secrets of Money or Unshakable, that book, or Rich Dad Poor Dad, and obviously layinvest.com to kind of just get your feet wet and then take some action step. Hey, let me buy a little bit of Bitcoin. Let me buy a little bit of I don't know, whatever stock that you like or index you like, and that would kind of motivate you to get in the game a little bit. I guess that's the easy action steps.
Not to mention, you could also get started with paper trading. Paper trading is it's a way for you to trade with fake virtual money. So you could have fake money to start investing in the market, but the purpose of this would be to test if your theories of a company are right. So that's like another simulator for you to help you learn about stocks.
Yeah, man. Wow. Is there anything to add before we kind of end this conversation off?
That's about it. It's a lot of information through these part 2.
Yeah. Man, it was we try to make this into like 1 hour, but we always go over time.
It's hard to cut down on these just a lot of insightful ideas.
Yeah. And anything I wanted to plug for the audience, like how can they kind of keep in touch with you or connect with you?
You can keep in touch with me at layinvest.com, so LEINVESTS.com, and then you can always leave a comment on there, or you can always find me on Instagram, which is also LEINVESTS and an underscore.
Okay. I mean, do you have any like consulting or coaching that you do right now? Or?
I'm not doing any consulting at the moment, since I'm not certified as a financial advisor.
But would you want to get like a CFA kind of thing?
I might plan to do like a CFA.
Okay.
But anyone who's out there looking for a financial advisors, just make sure to do your research on what kind of attributes that you're looking for for an advisor.
Yeah.
So that's quite crucial.
Okay.
They're kind of in charge of your money.
Right. Yeah. Someone with integrity is definitely
for sure
up there. All right, man. Hey, thank you so much for doing this conversation, man. Appreciate that, man. Appreciate to see another homie, literally homie, and that's just getting better and better, and that's always constantly upgrading himself. And I'm sure if we come back even next week, the insight would be even juicier, and for sure next year, and because it's about that growth mindset, like that upward loop, man. Yeah. So, hey, I hope you invest. I hope you. Thank you for investing your time in this conversation. I hope you got some great, juicy value out of it, and that has made you like a little bit smarter, a little bit wiser. Your heart is a little bit more open after this conversation. And the reason why we want to make sure that we also touch on this financial subject, not all about personal and spiritual development. I think financial abundance give us a lot of freedom to do the things that we care about, and so it's important to equip ourselves with these kind of knowledge so that we're not like a slave to the system, but more we're aware of the system. We want to change the system, but we also position ourselves and the money in a way where we're benefiting instead of being undermined. So I feel like knowledge is power, and we feel very empowered knowing these things, and that's why it's always good to share it out. Not saying that we know a lot of different things, but just knowing these things is already like 20 steps ahead from not knowing them. So yeah.
For sure, it'll definitely set you apart from the majority people in the world.
Yeah, for sure. So hey, thank you for checking out this episode, part 1, part 2, or just part 2, and I'll see you next time.